Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yes, Bitcoin on the 4-hour. We put in our high here on a 4 and 9. We retraced just below our resistance area. Our resistance area that we had drawn in. I mean, this range. I mean, you could have had levels drawn in a bit below lower, which is where we actually did wick down to, and we are now trying to push our way back above this resistance area. So this is obviously looking back above this level. This is actually looking pretty good if we can push back above here, and then especially if we then take out these recent highs here, then we should see a nice squeeze to the upside. So yeah, not much else to say on that. We don't really need to go over the stochastics, but we'll have a look at them at the end. But they're obviously going to still be looking pretty good here. If we want to go and look at some other markets, the Ethereum Satoshi market, I mean, the Ethereum, yeah, I mean, normally we would say this is a good barometer of risk within the crypto market, but I think this is getting driven more based off the merge narrative rather than just a general gauge of more risk taken in the market. But nonetheless, it is good. Part of this will be the fact that Bitcoin is moving up, so riskier cryptos such as Ethereum will be moving up more relative to Bitcoin. But yeah, like I said, a lot is due to the merge. We did get a decent pullback, actually a bit shallower than we could have had. We could have pulled back further, but yeah, pulled back down actually to this nice horizontal level, and yeah, back above this resistance. So we'll extend this along. Pretty much coincides with this high as well, roughly. So yeah, we get back above here. This is going to be looking extremely good. Yeah, I mean, just look at it. It's going to be looking extremely good for a move at least to like the top part of this range, and then if we break onwards and upwards from there, yeah, I mean, we're gonna get we're gonna be heading towards a flipping in, put it that way. So yes, if we want to look at the USD parent, it is at resistance area here as well, just this horizontal one we've got in here. The next major resistance level is around this $1,800 level. We get back above there, we start heading towards 2,000. If we do that, then yeah, things will start to look very good. Once this is probably these two areas are probably about the most important resistance areas we're going to run into. If we break above this one and then this one, we could see a decent move in Ethereum basically. Let's have a look at some other markets. Obviously, we are getting driven by macro, which is driving the SPX higher, S&P higher, futures, as you can see. Get flirting with this resistance area. We get back above here, then yeah, next targets are up here, and then yeah, I mean, we're obviously higher than these highs here, but if we actually get above here and above this high, that would be a pretty good looking chart then for more upside. And I mean, realistically, if we get above these highs here at 4,200, I know we're quite far away from it at the moment, but if we break into this area, grind our way over 4,200, then I mean, we could be looking at that crack up boom towards basically to new all-time highs, 5k in the S&P. Yeah, interesting times. Yeah, people are talking about sizable bear market rallies that you get during a longer multi-year bear market rallies, and if we look at how far we are off this low, just about 10%. So if we were to look at what is, I mean, the average large decent bear market rally is between about 30 and 40%. So just 20% alone puts us at well, there we go, puts us at this resistance, which is a substantial move. I'm gonna have to even just move the chart a bit here. 30% 30% puts us basically practically towards yeah, I mean, towards all-time highs, and clearly 40% puts us at new all-time highs. So interesting concept there, that we could have a bear market rally of basically a 40% move that would literally put us at new all-time highs. But again, don't forget, fiat is failing, so these nominal numbers whilst maybe new highs, does not mean that that we're still not actually in a bear market in real terms. We will just be in like I keep saying, the crack up boom phase of the final collapse of finance 1.0. 10-year yield took a decent move down here. I think we had very bad US economic data out yesterday. I mean, basically what I think is happening here is that this conflict in the Ukraine is going to be pretty much over soon. Zelensky is losing support for his basically his suicidal war that he should have known he couldn't win. He's losing support for that. Russia is basically just going to keep the Donbass, gonna basically just take out the rest of that area, keep it, and then the war is going to be over. The Eurozone itself is in absolute dire straits. So there is only so long basically Europe was gonna put up with being the US's B1 TCH, and it isn't gonna basically carry on just being the sacrificial lamb for the US total war against Russia. It's just not basically politically palatable or acceptable. Fair enough, the US over there with its energy independence miles away from the place, but we are talking Europe, which is directly next to it and heavily reliant on Russia. I mean, there's no real support for this going forwards. Markets don't want it, people don't want it. The only people that want it are just the what are they called, the military industrial complex and the scammy elites that are charge of the US, that don't really care about anyone or anything other than themselves, their own power and their own wealth. So yeah, basically that war is gonna come to an end soon, and then yeah, that is clearly going to be good for the Eurozone, clearly going to be good just generally for inflation, and then yeah, maybe we can turn a corner with that. I mean, the Eurozone is going to be printing to buy bonds. Ultimately, the US is probably going to then have to start buying Eurozone bonds as well. We are going to end up with more liquidity in markets. And then just that is that. When you are in a fiat Ponzi, when you're in any sort of a Ponzi, pretending that you're not and pretending that you can turn off the liquidity spigots is just asinine. I mean, we've had basically QE 1, 2, 3, 4, whatever going forwards have all been exponentially increasing in size because we are in a Ponzi, and that's what needs to happen. So if you keep having to have exponentially larger QEs to basically keep the Frankenstein system alive, what makes you think you can literally start reducing liquidity and anything is going to happen other than the complete collapse of that system? What you actually need to do is actually have even exponentially more liquidity than you were pumping into the market previously. So yeah, we are just run by clowns. We are just run by clowns that I guess you can either call them clowns or you can just accept that they're highly malicious. They are either stupid or they're highly malicious, and they don't really care about people. They just care about themselves and their own power. Anyway, ran over. Gold still down in the dumps. Did hit a deep, well, I say deep, it is pretty deep, a $20 lower than the $1,700, so a $1,600 handle. Pretty amazing to see after these moves up. Absolute destruction there for Shift coin. Oil also, like we were kind of looking at, it gonna put in a lower high. We are in a downtrend. Now I think we are gonna maybe bounce around here, ultimately take this out, especially with a basically a resolution of what is going on in the Ukraine, yeah, so there is that. There will obviously be an opposing force that Europe will potentially look better, so can start up or just carry on with more manufacturing that is probably being priced out of the energy markets at the moment. But yes, there obviously is always opposing forces, and then obviously there's what's going on in China as well. And yeah, yeah, let's not even really get into what's going on in China. It's getting a little bit wild over there, but it is kind of what it goes through its wild spates there. Maybe it is the end this time, who knows. What else? The end for the CCP, that is. What else do we want to look at? That is about it for that. So we'll have a quick glance over the stochastics. We know long-term ones are looking good. What are short-term looking ones looking like? Yes, 4 hour looking good here to turn back up, give us more upward momentum. 10 hour though, downward pressure potential. 12 hour, you could say the same, although it is starting to look like it wants to turn back up. Daily looking good here. 2 day looking very good. 3 day, I mean, these ones we know are basically looking very good. Weekly good. Bi-weekly even turning up from a low level, and monthly ultimately will be dragged up providing we break above this 23.5 and hold above there for a minute, for a couple of months. But yeah, very optimistically looking, very good looking. Nothing is obviously guaranteed, but these stochastics are looking like a very a serious retrace possibility. Obviously, if we have stock markets break higher, obviously if we get a resolution to the conflict, we get a pull back in obviously inflation numbers. I mean, that is the Goldilocks scenario for a substantial, even if we are in a multi-year bear market, a substantial bear market rally that could be obviously multiples of the 10% that we've already had. Even if we only go for like a 20%, then that is another 10%. 20% off the low. That is another 10% higher than where we are now, which is a pretty substantial move. And don't forget, these are moves like, say, a 10%, 20% move in SPX actually will translate into crypto into a obviously a larger move. It's obviously a massively higher beta asset. So that is Bitcoin alone. Then never mind the even more higher beta to even Bitcoin altcoins that can just go on an absolute tear, and we could go on one of our mad runs in crypto. So let's see what happens. I guess what spanners can be thrown in the works. I guess the world doubling down against Russia, which I personally don't see as is gonna happen. Inflation, I guess, instead of accelerating even harder and higher and faster, which I don't see is going to happen, but you know, stranger things have happened. The Japanese central banks could decide that they are not going to pin the yield curve anymore. I mean, that is obviously, that would severely disrupt the financial system. But realistically, though, we are expecting reliquidification from the Fed. We are expecting a pivot. As Ross would say in that Friends episode, we are expecting a pivot from the Fed, and I mean, markets are pricing in the end of rate hikes this year, and we are basically coming into like towards the 8th month of this year, i.e. we'll have 1 quarter left. That is correct. No, an 8th, a third. We'll only have a third of the year left. So yeah, not much more time for raising before we pivot, and then we just play that silly game again. Remember, like I said, central banks, they want inflation, they just don't want people to be aware of it or it to be extreme, and they only don't want it to be extreme because then people are aware of it. They would happily it be extreme 10% every year if people were aware of it, and clearly when they were stating 2%, it was probably running at like say 4%, 3 or 4%, but they just lie about statistics anyway. So yeah, that is it. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.